No man's knowledge can go beyond his experience. John Locke. What we try to do here every day is give you knowledge and experience, 10 to 15 minutes a day. That's all we ask to review the four primary charts. And of course, at your request and behest, we have added in Bitcoin, real estate, and black gold or oil. And we see everything up for the day on our four primary charts: the S&P 500, the Nasdaq 100, 20-year bonds, and gold. But what's interesting is as we look at the Heikin Ashi candlesticks and we look at the price percent oscillator, which is our main driver, we'll jump into those things and update you on those other three charts. Also, for those of you who are interested in the Accelerated Market Mastery course, I've been getting your emails throughout the day and over the weekend. I will be scheduling with you. Please, when you do respond, if you're interested in the course, it will be coming up soon. Those who don't know about it, there's a link in the show notes. You can find out more about it. It's a 3-month course, 3 parts, dealing with mastering the charts, mastering options, and then how to create your own virtual personal wealth fund that uses what you've learned in charting along with what you've learned in options to be able to develop a highly liquid personal wealth fund that you're going to create, practice, trade, show that you can do it. We live in very uncertain and dangerous times. Liquidity, I say over and over and over again, is the key. I was having to explain that to some people in some of the online forums today who were concerned about everything crashing right now and what they could do about those things. Well, I can't give you advice on what you should be doing. I'm not a financial advisor, but I can sure help you learn how to practice trade, chart these markets, and know what's going on. Remember, my friends, the only thing that matters is price movement. And for those of you who are like panicked that, oh gosh, I have to have everything in gold because the market's going, no. What we just went through, if you look at the chart that we are looking at right now, those of you who are listening on iTunes, I'm going back to when the market started rolling over, back on February the 21st. We had the weekly vertical crossover going down on the week ending that's the 2-day chart. The week ending, and the 2-day chart showed that also, but the week ending the 28th, that was February the 28th when that weekly vertical crossover occurred. You saw it coming. You had time. You were able to deal with it, okay? Unless there are atomic bombs that start going off in cities and the rug is pulled out from under us with an exogenous event that has not yet occurred, something that we just can't plan for, alien invasion, whatever it is, that's something completely different that we've never seen before. But look at what we've been able to do. You guys have seen how accurate our weekly vertical crossovers are. We can chart these things. You can learn to do this. It's very important. You spend 10 to 15 minutes a day like you're doing right now to understand what's happening. And if you're not practice trading, you're not getting the experience that John Locke tells you you need in order to apply your knowledge. You've got a lot of book smarts, but you got no skill set, and you're going to get run over. Now, let's put it to work. What do we see happening in the S&P 500? Check out the weekly candle. Look at it. It's already starting, popping up nicely, 1.21%. Check out that beautiful weekly vertical crossover, the week ending the 8th of May. And you guys have noticed now that I'm giving you forewarning on Thursday of the potential of the weekly vertical crossover, because our entry point is when? 350 or so at the end of the day on the Friday that it's crossing over. That makes it pretty idiot simple for knowing when to get into your practice trade. Then what you have to develop is the skill set to know when to get out, how long you can ride it. That is where the real skills come in. And of course, that's what we work on here every day. That's what we talk about in the book, Charting Your Way to Wealth. Thank you for all the purchases. Been sending them out all over the world. and all over the country today. And if you want your copy, look at the link in the show notes. But we teach it there. And of course, the Advanced Market Mastery course, we focus heavily on learning your exit points and how to practice and do that. It's going to take you practice trading and learning all of the hacks, the tricks, and what it just takes by practicing and learning the personality of the charts. So we see the price percent oscillator moving up, derivative oscillator moving up. Nice day for continued up movement. Folks, does it make any sense that the market's going up? This is one thing I don't understand why I keep encountering. I mean, I keep giving you the reasons. Maybe it's my fault. I keep giving you the reasons it shouldn't be going up, but then I keep telling you it is going up. The reason I'm giving you the reasons it shouldn't be going up is when it does go down, you won't be surprised. But in the meantime, if you can trade this and you can practice trade this, we've been doing it. Don't not do it because you're worried about it crashing at some point. Trade it in the meantime. Be ready. Be liquid and ready to pull out and take the down move. Take the other side of the trade when that happens. That's what you're practicing for, okay? That's what you keep doing every day is write it up and write it down. That's what makes us unique in what we do and what we talk about is our ability to be chameleons, to follow trends. That's what we do. We follow trends. If the trend is up, we follow it up. When it goes down, we follow it down, and we're not fooled by the talking heads in the media, the people that write one thing one day and another thing the next and act like they never told you the exact opposite the day before. Don't pay attention to those people. They're trying to sell you usually a product of some kind. Again, don't pay attention to them. So what do we see on the 2-day chart? Check it out. We see things hiking up even more. And again, this is a completed candle now. This represents Friday and Monday. Price percent oscillator heading up, derivative oscillator heading up, pushing way through the Bollinger Bands. That's a lot of energy. And we look at the 4-hour chart. We can see how things have been just steadily moving up over the last 2 days on Friday and Monday, as reflected, of course, in that 2-day candle. So S&P looking quite nice. Like I said, up 1.21%. Let's go to the Nasdaq 100, up 0.78%. Beautiful jumping in point all the way back on May. Look at these stair steps. Look at that. Just gorgeous. How many of you have ridden it all the way up? Is it not beautiful? And we see the price percent oscillator continuing to move up. Now check out the derivative oscillator. It's gone flat on us. That's interesting. Just the first day of the latest weekly candle, but pay attention to that. And again, the high last week was 240.30. You notice how I always look at the highs, 241.68. So we've popped higher, which is good to see. You always pay attention to that. Where if you're hitting higher highs, that's good. When the higher highs start slowing down, you'll see it first reflected in what? The derivative oscillator, because it's a triple smooth version of the relative strength index. Shows you overbought and oversold position. So when the buildup starts slowing down, it's going to be reflected in that derivative oscillator. Pay attention to it. That's why we have it on the chart. We look at the 2-day chart. We can see the price percent oscillator heading up higher. Derivative oscillator gaining upward momentum, hitting a higher high. Nice, good size candle. And we go to the 4-hour chart, and it shows us up movement on Friday, both in the morning and the afternoon, and a little slowdown in the morning on Monday, and then a push on through in the afternoon. You can see how it didn't reach the high of Friday afternoon, but then popped up in the afternoon on Monday, which is a good sign. Derivative oscillator heading up, price percent oscillator heading up. So right now, the Qs, that's the Nasdaq 100 and the S&P, looking good for us, folks. Keep just racking up more and more virtual profits for your practice trades. Just gorgeous. Now, what about 20-year bonds? Well, they were up for the day a little bit. We're in a confirmed down move, crossed over going down back on the week ending the 22nd of May, and we see the candles just building. Now, we've not hit a lower low from the prior week yet. Derivative oscillator still gaining downward momentum. Price percent oscillator's lost a little bit of its downward speed. But again, it was a bit of an up day, 0.38%. We go to the 2-day chart. How's that reflected? Well, look at it. I mean, this is a Heikin Ashi candlestick. This is not a high open, low close. Heikin Ashi shows us average pace of price movement. That's what it means in Japanese, I'm told. Average pace helps us see what's happening. Well, it's showing us that we are having, again, an acceleration in down move, hitting lower lows with a big red down candle, the largest we've seen going back on the chart we're looking at right now for many weeks. We see that the price percent oscillators heading down, derivative oscillators heading down. Now we tune in a little closer, and that's where we see where things bottomed on Friday morning and are sort of sliding sideways and up. We can see that up movement in the afternoon. It was a doji in the morning on Monday, and the up movement was in the afternoon. Price percent oscillator still negative. Derivative oscillator bottomed out at the bottom of the price movement on Friday morning. So we'll continue to watch. Price is still below the weekly trend line, well below that, well below the 2-day trend line. We'll redraw this 4-hour trend line. I don't draw them on all the charts. I draw them when I feel like it, when I feel like they'll be helpful. And of course, that's your prerogative. Use them, use trend lines as they assist you in seeing things. This is showing us that, of course, that afternoon price movement violated 2.5 days of trend lines. So keep an eye on that. No big deal. Remember, once we get into a trade, we always revert back to how strong our 2-day and our weekly charts are. If that 2-day starts to cross over in the opposite direction, lots of bells and whistles are already going off. First thing you'll usually see is that 4-hour trend line be crossed. Then if things start worsening, your 2-day trend line gets crossed. And then as that 2-day starts to go negative on you, as far as the price percent oscillator, huge warning signs that you might be ending that trade. So again, it's up to you to practice these things, to learn them. You will not learn them if you're not practicing them. If you're just listening to me, I hope you like the sound of my voice, because that's probably about all you're getting. Now, let's go to the weekly chart on gold. We had that crossover in gold at the end of this last week on the 5th of June. We called that. We see it powering through. As we start the week, we have a red down candle that's forming. Now we can see on that red down candle that it has not hit the low that it hit in the prior week. I was just moving the weekly vertical crossover vertical line, gold line, out of the way. Isn't it interesting we use a gold line there? Why? Because it's golden. It almost always works. It's in fact worked every week this year that we've had one. And I think we've had 9, 10, 11, I believe 11 in our 4 charts. You may have had more in the other charts that you follow. And again, I encourage you, if you have stocks, ETFs, other things, sector funds, whatever it is you're interested in, follow those too. See if they're chartable and practice trade them. You're not going to get good at it if you don't do it. We see the derivative oscillators also flipped over negative. That's beautiful. We like to see that happen at the same time. Gold was up for the day, 1.08%. But look at what the charts are telling us. Price percent oscillator heading down, derivative oscillators gone negative, and a red down candle. Now we want to see that low going lower than the prior week's low. But we'll be patient, again, as long as these charts support us. What do we see with the 2-day? Well, we see, again, price percent oscillator moving down, derivative oscillator gaining downward momentum, down candle. That's mostly Friday's movement. You'll see that in a minute. That's beautiful. We go to the 4-hour chart. You can see what I'm talking about. It was down in the morning. That's where the real down movement came. Slowed down, pulled back a little bit in the afternoon. Didn't keep with that going to a lower low. But again, quite nice. We have that 4-hour trend line drawn. We've not violated that yet. We'll see what Tuesday, Wednesday, Thursday, and Friday hold for us. Hopefully, we'll see things roll over and keep going down because we have established ourselves in a short position because of that weekly vertical crossover going down. If it doesn't work, it'll be the first one for the year that didn't work. But you know what? If it doesn't work, we'll pull it. We'll pull it, take the minimum loss, and move on. And that'll be the first of the year. Hasn't happened yet, but you know what? Anything can happen in the marketplace. That's why you have to be ready for it. And remember, cutting your losses early, your early loss is always your best loss. If you are not being smart about those and you are holding on to losing positions, it is so hard to make money back that you've lost. It's so much easier to make money. First rule of trading, don't lose money. Second rule of trading, make money. Folks, for those of you who are only interested in our 4 big charts that we've covered here for the last many years, we're done. Thank you so much. If you're interested in the Advanced Market Mastery course, don't forget priority is given to Patreon members first, book buyers next. They both get discounts, 10%. Patreon members, 5% book buyers. And then everyone else, you need to email us, cw@chartingwealth.com. Be sure to include your telephone number. I've had to send some people emails back to send me your telephone number. I'll text you, find out a good time to talk. I'm only letting people in the class who I think are a good fit. If you don't have the money to take the class, then you don't have the money to take the class. You need to just keep practice trading with us every day. But if you are ready to take that next step, you want to accelerate your learning, learn all about options, learn all about charting, learn all about setting up for yourself this virtual personal wealth fund and how to really stay liquid and really make this stuff work. We're here for you in that. There is a substantial cost involved. The class is $2,500. It is a 3-month class plus 3 months of follow-up to make sure with question and answer sessions and all that you have understood everything we have taught. I put out a class about every 2 weeks. And again, we put it up for those 2 weeks and then take it down and move on with the next set of material. It is all very, very personalized. That's one reason I talk to all the people that are taking the class so that I understand what they need and where they are. And I typically have a theme there. And also, it's very much based on where the market is today. We don't use old material. I recreate everything when I do these intensive classes for specifically the time period we are in, what we are facing, and what I see coming in the future to make sure that your practice training and trading is as valuable as possible. Now, let's keep moving on. What do we see? Bitcoin down for the day just barely, 0.17%. Talking to somebody this morning about Bitcoin. Fascinated by it. You can see it hit its high of recent high, $10,323 back on the week ending the 14th of February. Then it fell off the deep end, went all the way down to $5,118.94. Boom. But look at what it's done. It's come back to a high of $9,978, just a few bucks off its highest high over the last many months. And it then sort of has been sliding sideways since then, starting the week off a little weak with a red open box candle, but that price percent oscillator still positive, derivative oscillator positive, losing some upward momentum. Go to that 2-day chart, and of course we can see where it's ebbed and flowed. It so far, the latest 2-day candle not hitting the high it hit back on the 2-day candle representing Monday the 1st and Tuesday the 2nd of June. But again, is a green up candle. That price percent oscillator is still positive but heading down. Derivative oscillator positive but losing some momentum. What do we see on the 4-hour chart? It's just sort of been bouncing around the red signal line, although it looks like it is at the end of the day going from blue to red. And we see that the derivative oscillator is gaining downward momentum. It's really sort of stalled there. So we'll continue to watch, see what there is to see on Bitcoin and sort of where it's going, what is going to happen with it. Again, sort of testing around that high. We'll see where Bitcoin goes to next, keep you apprised. What about real estate? Well, what about it? We had that weekly vertical crossover we told you about back on the week ending the 29th. And look at it, it's a booming. Why is it booming? Couldn't tell you, my friends. Can't explain it. I just can't. I mean, nobody's worked in 12 weeks. Cities are burning, properties being destroyed, but real estate is soaring. I could give you some theories about what's happening with printing money and everything else, but I don't have to give you any theories because in the end, folks, you don't need to worry about them. You know what you need to worry about is price movement. It's not trying to figure out why, okay? Let's stop that. We don't need to know why. We just need to know that that's what price is doing and you can see it. And those of you who jumped in around the $77 mark have seen going in now to the second week after that, a high from $77, the entry point, to a high of $86.80 in 5 days, 6 days. 6 days. Is that decent? $9 in 6 days on a $77 buy-in on your practice trade? Yeah, that's good. That's the magic of the weekly vertical crossover. You don't have to overthink it. You don't have to try to figure out why real estate's going up when it makes no sense. You just have to follow price movement. Or you can tune into the Wall Street Journal and you can watch CNBC and Bloomberg and you can break down where real estate ought to be going and blah, 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 blah. And this doesn't make any sense and I'm not going to get snookered. Okay, then don't. Then put all your money in gold. You know, put all your money in Bitcoin. I mean, go out and put all your money in Brazilian stock, whatever. Why not do what works? Why not just follow the charts and do what works and practice trade that and learn how to do it? Does that make too much sense? No. Let's make it complicated. Don't obey our rule on Occam's razor that the answer that's simple is the best answer. No. Complicate life. Make it really hard. Stay up late at night trying to figure out why this is happening and why price is wrong. You know, try to make the market do what you want it to do. You know what'll happen? You'll end up either killing yourself or just running out of money and living in an old folks home, a ward of the state. So don't do that. Follow price movement, my friends. That's what counts. Look at the 2-day chart. Booming up. We see the price percent oscillator striking up, derivative oscillator gaining upward momentum. Look at the 4-hour chart. We can see we're just heading up, a little slowdown on Friday afternoon, but taking off on Monday, particularly Monday morning. So that's beautiful. What happens when real estate rolls over and starts to die? Guess what? We'll get out of that practice trade, won't we? We'll take the profits we earned, our virtual profits, and we'll move on. What about oil? Oil down for the day, 1.73%, our biggest downer. But look at those 4 weeks. We see that Heikin-Ashi candlestick, green even with the down movement. Derivative oscillator gaining upward momentum. It's positive and gaining upward momentum. Price percent oscillator hasn't crossed over yet. Maybe it will. Maybe it will. If and when it does, we'll be ready. Look at that 2-day chart crossed over going up back on the 19th and continues to move up quite nicely. Latest 2-day candle, even with the down move, that average pace candle showing us up movement, as is the derivative oscillator, which is about flat, maybe losing a little momentum, but that price percent oscillator moving up, pushing through that 50-period moving average line. And lastly, we can see where things popped up on Friday and then sideways down a little bit at the end of the day on Monday. So we'll continue to watch. We can see where oil has done this in the past, where it pops up and then sort of slides down, digests, and then pops up again, and then slides sideways down, and then pops up again. Maybe we're in just that sliding sideways, getting ready to build some more momentum. Again, it's got a ways to go. We can see that. We can see how much oil has lost. But folks, that's where we are as we end the day on Monday. Do you not love this? Is this not exciting? I love it every day. I do this every day for you guys because I love it. And it makes me better and better. The more I teach, the more I learn, the more I'm able to help you guys as well as myself. This benefits me greatly with my own trading. I mean, I tell you, there is nothing like it. And I thank you for being here with me. If you're interested in our training, please, by all means, let us hear from you, cw@chartingwealth.com. If you can't do it, we totally understand. Just keep practice trading until you can. And at some point in the future, hopefully we'll offer this again, and it will be worth it for you, and you'll be able to attend. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.